It has been, of course, a very, very quiet day for the markets today. It was sixth consecutive day that we entered in the red, in the red zone, pardon me. Remember that overall, of course, so global sentiment, of course, is also looking very subdued right now. And for our markets as well, things weren't any different. You had the Nifty ending just about at the lowest point of the session at about 61.55 for the Sensex as well. On closing, we were lower by about 0.5%. A mild degree of outperformance, that's what we saw from the broader end of the markets today.
All right, on the show, of course, Vineet Bhatnagar from Phillip Capital, Prakash Diwan from Altamount, and Sandeep Wagle joining in. Prakash, let me come to you first. How are you really analyzing the fundamental setup of the market right now? We are just ahead of key macro events, and the way market has traded in the last 5 days, do you think there is a fair bit of short already built into the system?
Well, looks like, post the last Monday outcome on the election results, Ajay, very clearly, I think all those days that we've seen, all the trading days through the week have seen significant amount of mood on the short side. The build-ups also have been continuously seeking rotationally different sectors to be active in. So my sense is the key triggers, and very clearly the shrinking volumes also indicate a little bit of a risk aversion of sorts that's prevalent in the market. So fundamentally, markets seem to be in a decent buying zone, provided we have these triggers behind us or the events behind us. And I think tomorrow's event is significantly more important than day after's, because the RBI credit policy may not come up with any surprises as much as the FOMC seems to be in an undecided zone of sorts. So I would watch that out much more closely, and depending on that, the markets could take some cues and a significant move either upwards or downwards. My sense is it could be upwards.
In fact, if we talk about some data points as well, you had the WPI number coming in, and despite the number being at very elevated levels at the highest points in September of 2012, it really didn't do much to spook the markets, which had anyways gotten off to a bit of a wobbly start. Sandeep, at levels that we are right now, and given the fact that despite the macro cues, the market still managed to end above 61.50 mark, how would you be looking to trade it, especially given that you have the RBI policy meet as well coming up?
Well, I think 6100 is what I am looking as at a bottom. In case that is taken out, probably we may go to 59.50 or so. I don't have a view of a 5500 or a 5700. I am not that bearish. I still feel that this is a corrective move, and probably time-wise we will correct. So, talking of the event that you just mentioned, if something positive comes out, we may bounce back to 6200, 6250. So broadly, I will talk of a range of 6100 on the downside, and on the upside 6230, 6250. I don't expect that to be crossed in a hurry as well. And more of stock-specific moves, that is what I would expect.
Right. Vineet, what's the sense you are getting about the Bank Nifty? Because we are looking at, big moves coming in the components of Bank Nifty. Today, of course, 11,400 is where it has ended. But the kind of selling pressure we've seen last week and in the run-up to the RBI event, do you think banks would continue to languish?
I think they would, but at the same time, I think the freedom that the Reserve Bank would have in terms of doing anything other than increasing the interest rate, with the backdrop of what we saw for the inflation as well as the decline in the industrial production is perhaps already factored in, and which is the reason why we saw a great amount of compression as far as all the banking stocks were concerned. So my sense is that if the news does come about, which is in line with what the street is expecting, there should not be any dramatic decline as far as the banks or Bank Nifty as an index is concerned. That seems to have got priced in. However, if the other thing, which is the Fed tapering, which to our mind is not factored in completely, does come about with with a taper number on the monthly basis, which is higher than what has been read everywhere, then there could be an all across the board kind of a decline, in which case I guess banks will also suffer.
In fact, let's also touch upon, Prakash, the name that I mentioned earlier on, GSK Pharma. We saw what the parent's announcement of an open offer did to that stock. In fact, if you look at the CNX MNC index as well, that one was up by close to 1.5%. And you had the rub-off effect coming into quite a few names, a couple of the pharma names, of course, the Sanofi and the types, as well as an OFSS. Do you see any trade or any special situation trade coming into these stocks?
I mean, it's difficult to kind of compare them because each company and each parent would have a different outlook towards their India operations vis-a-vis the global perspective. Very clearly, the GSK move, the Glaxo move is very similar to what Unilever thought through some time back, and we've seen them with high conviction going ahead and investing money into the Indian business because that's where they see growth. But naturally, it does kind of tend to make people believe that the likes of Pfizer and Abbott, maybe an AstraZeneca, Sanofi, all of them would also kind of have the same rule book applying to them. My answer is it not necessarily it happens at the same time. But what it clearly indicates is that the pharma space is in for some overdue M&A and an intense bout of that in the next few months. And you would probably see some of the smaller names start fetching a lot of value, a lot of importance in the scheme of things, where companies would either want to invest money into their own businesses in the India operation or maybe acquire a lot of newer businesses. So watch out for that. And I think Granules India, Torrent, Cadila, these are extremely good names where there could be some sort of M&A activity which could trigger off. So, the entire pharma space should be abuzz and there should be a re-rating upwards. So I can think of a lot of names which sound promising from that angle.
Right. But IT was also one space which was quite active in trade. In fact, if you look at the action in rupee continued to trade strong most part of the session today, despite a much higher than expected WPI number. IT stocks, on the other hand, especially the large cap ones, were surging to new highs. Sandeep, how are you looking at Infosys in particular? Because not only in the cash segment, the delivery was quite high, but even if you look at the calls, the top traded calls today, Infosys was 3,500 call was one of the three top traded calls today. So what kind of trade is standing out there?
Absolutely, Ajay. I would single out an Infosys, a Wipro and a Tech Mahindra. I mean, I would say that these three stocks are very likely to outperform. I see a very clear 5 to 6% upside trading move, maybe not in Infi, but certainly in a Tech Mahindra. I would talk of a level of 3,600 in Infosys. I mean, any decline towards 3450, that range is a good level to buy with a probably stop loss a little below 3,400. And I would talk of a 5 to 7% upside even from the current levels.
Vineet, we want to get a sense on the oil and gas stocks also from you, because that was a sector which will, of course, be active depending on what the crude does, because that's when OMCs would be affected, even ONGC for that matter. What's the scenario here in that basket, and what is it that you're factoring in, keeping in mind the crude price momentum?
I think there has been some amount of lid on the crude prices is concerned, and we are all seeing that quite evidently over the last 4 weeks or so. So there is no runaway risk that one is factoring in or one is looking at as far as the crude is concerned, and therefore the benign impact that it would have or it has on ONGC is quite visible. But at the same time, one is not looking at a sharp decline in the crude prices and therefore a corresponding upward move or a strong upward move in ONGC. So it would remain stable, to slightly uppish, and that's it.
Right. Pull up Titan. That is one stock which was seemed to be coming back on the trader radar. It was up 2.5% in trade today. But if you look at the longer term view, in the last 6 months, the stock has actually drifted lower. On a 1 year period, has been massively damaged as well. Prakash, on talks that the way CAD seem to be coming back in the on the levels which are quite okay with the government, do you think some of these curbs could be reversed? Because parts of media are reporting that, and if that does happen, do you think the underperformance of Titan could also be reversed?
I think it seems slightly juvenile to believe that these things would happen, so simplistically, Ajay. I mean, the government is trying on all counts to keep the rupee firm and to keep the CAD under a fairly tight range of sorts. And given that it has finally started helping the curbs that they had imposed a few months back, I don't think they're going to be in a hurry to, change that or remove those curbs. And more importantly, I don't think that's one of the reasons why Titan has come down. It's generally the overall slowdown in consumer spend on these things that has impacted Titan along with a lot of the other peer group players. What Titan probably saw was a come off of sorts from the MSCI impact also, and that I think has got finally tapered off. So you would probably see fresh positions being built in the new setup, in the new percentage, the weightages that it holds, and that's where the upside lies. So it's more of a technical up move that Titan could face, maybe not retrace the entire journey downwards, but of course part of it, and it could probably start looking at about 15-20% upside from here very quickly, maybe by March itself.
Okay, that's quite a bullish stance coming through on a Titan. But let's also get in a word then on the cement names, because today there was also another pocket that was under pressure. You look at it, ACC or an Ambuja Cement. In fact, even from the mid-cap basket, a Prism Cement, that lost about over 2% Sandeep, how would you be approaching these cement names? Is there any trading play that you can see on the charts?
Megha, yes, I would say so. I would think so. I have been bearish on this space over the last 3 or 4 trading sessions, and Ambuja has given a fresh breakdown today. At a current level of 175, I mean, I would be comfortable selling into a 178, 180 level with a stop loss of say 185 or so. And I would look at sub 165 level, so anywhere around 160, 165 makes a clear 8 to 10% downside, so that can be taken as a good trade.
Vineet, how would you approach names like Tata Motors in the auto space? Because, that has had a very volatile ride, especially at these levels. Some bit of covering on Friday. But looking at the data points coming in, especially the global wholesale data which came over the weekend, that looked a little weak. What's your view on Tata Motors?
I think yes, Tata Motor, shall I say, at one point in time the street was not able to factor in the GLR, factor. And now, now that everybody knows about the GLR related, upward momentum or, re-rating, if you will, as far as Tata Motors is concerned, heads have started turning in terms of looking at, how the sales of JLR is coming about, and more analysts are actually coming out to cover what exactly is happening to JLR in China, for instance, and that is where I think the conviction with which a simplistic view of a one-way move for JLR and therefore of Tata Motors in the onshore market was concerned seems to be now taking a more realistic stand. So combined with the fact that the domestic sales of the domestic pickup is still muted or unclear, the street is getting a greater or a better handle on what actually gets contributed by the JLR. So, that's where it is. In fact, we ourselves are trying to get a handle on the China story as far as JLR is concerned just this week, actually today.
Keeping it with the heavyweights, later on in the week we have the Fed as well meeting, and in Fed action always ends up influencing the commodity markets as well. For the Indian markets, names like a Tisco or a Sesa Sterlite have had quite a stellar run over the last couple of months, and Prakash, a large part of that also had to do with the turnaround that people were beginning to see in the Chinese data. In addition to that, flows continue to come into the metals basket as well globally. But given the disappointment on the PMI front we've had in China today, as well as how the Fed probably might be behaving, how would you approach the metal names now?
Well, it seems, it was a momentum play about a month back, Megha, but it seems like a contra bet now. But the bet continues, in terms of a long position or a long view as far as I'm concerned. I would possibly believe Tisco would see a little bit of a pause of sorts, given its dynamics locally. But Sesa Sterlite, it's definitely on an up move. We've seen it kind of, post the entire merger situation, which was 2 months back. It made a high of 200 plus. It moved back It's again kind of started gaining some strength. My sense is it could be in anticipation of some positive news flow from the government side, which because it's imperative that the government also looks at enhancing the export potential of the iron ore segment, which is one of the big reasons why it's pulled down. We've had some very weak exports thanks to the absence of iron ore contribution there. So my very clear understanding is SSI is poised at a sweet spot of sorts, and you could probably see it move all the way to 230, 235 in the next couple of weeks, and I'm quite bullish on that, and that's a call that seems contrarian at this point, but it has a lot of merits to believe in.
We've got Poonam joining in with some of the names that are buzzing around in the dealing rooms. Poonam.
Well, Mika, what we're hearing from the dealing room is buy on Shashan Pharma. Dealers are suggesting a buy in mid-cap pharma stocks, and Shashan Pharma does top the list. Also, the buzz on the street is that the company has finalized sale of its cement plant, and that is probably going to give some upside in the near term to the stock. The stock is, however, down nearly 8% in the last 2 weeks, but on the back of that, we may see some uptick in this stock. The second stock is Motilal Oswal, wherein the dealers are suggesting a good uptick in the interest of the people in brokerage business or broking stocks. Motilal Oswal is also topping the list. The stock is trading at a book value of 85 per share is there on FY14 basis, and 95 is as per FY15 basis. So it is sub book value, as well as it's trading at good earnings per share basis as well. Also, the volumes are rising for the broking business slightly, as well as a good uptick is seen in the non-broking side of the business. So all these parameters are going to lead to a good amount of interest. The stock is up nearly 12% in the last 2 weeks, so watch out for this stock as well.
Thanks for that, Poonam. We've seen, a comeback of sorts happening in the IT name, and today was an example of how some of the large ones rallied quite a lot to multi-year highs. Which ones would you take a look at if you were to buy or keep a buy on IT packs? Which are the stocks on your radar?
I think TCS was looking rather stable. HCL Tech was looking all right. Infosys was also looking all right. I think all of it is really on the back of the batch of economic data that is coming out from US and Western Europe. At the same time, it is that period where one is anticipating that there will be a consistent good news that will come out, but there are still confusing signals that come out even from markets like US. So one saw that the latest batch of data that came out was a bit confusing, and even Thursday last week was a bit nervous session for Dow Jones in New York. So that being the backdrop, I think it is lending itself to a supportive price movement as far as the frontline Indian IT stocks are concerned. And if the defensive come back in fashion, in the backdrop of anything that we see as far as interest rates are concerned or QE tapering is concerned, then again IT will take the front stage. So people are holding on to it, perhaps adding on at attractive prices if they decline a bit.
And IT clearly seems to be the sector that does well, irrespective of the way the markets clearly are moving. But Prakash, let's talk about some, stock areas that you'd also be recommending. Any particular names where you see value in right now? What's on your charts, or what's on your radar rather?
It's difficult just preceding an event to come up with anything which looks very promising for the short term. But even then, from the auto space, we've got a contract call on TVS Motors. We've already seen Bajaj, Eicher, and Hero MotoCorp do extremely well in terms of price action, in spite of not so great sales numbers. TVS also has been kind of doing a lot of work behind the scenes in terms of improving its efficiency levels, particularly on the vendor management side and capital efficiency through working capital management and stuff. They have managed to do quite a bit, I believe, and there's confidence that stems from their dialogue with the management makes us believe that we could probably see a stellar run from TVS Motors from the current 54-55 neighborhood, and we could see it go all the way to 65 probably by the time the next results are out, which is in Jan. So, it's a short period call, but could give you a decent 20% upside.
In fact, the stock is up 60% in the last 6 months alone, so something surely happening behind the scenes over there. But Sandeep, what are the top recommendations you are looking at right now in terms of charts?
Ajay, I would go with a buy in a Tech Mahindra, stop loss of 1720, target of 1800. A buy in Sesa Sterlite, stop loss of 194, target 207. And a sell in Bharti Airtel, stop loss 320, target 303.
Thanks very much, Vinny, Prakash, as well as Sandeep for taking out the time and joining in today.